Welcome to the Deep Dive. We cut through the noise of earnings calls and give you what really matters. Today, we're digging into Sify Technologies' first quarter results for their fiscal year 2025-2026. Our goal here is simple: break down the key numbers, the strategy, and give you a clear picture of where things stand.
Exactly. And looking at Sify Tech's Q1, well, the headline numbers show growth, definitely. Revenue hit INR 10,723 million. That's up 14% year over year. And EBITDA saw a nice jump too. INR 2,111 million, up 18%. So, good signs on the top line and operational efficiency.
14% revenue growth, 18% EBITDA growth. Solid numbers, but then you look deeper, right? A loss before tax of INR 322 million. And after tax, that loss grows to INR 388 million. Plus, that huge capital expenditure number jumps out INR 2,874 million just in this quarter. That feels like more than just quarterly results. It feels as strategic, like a big bet. What's the thinking there?
Oh, it's absolutely a strategic play, a big one. The chairman basically kicked off the call saying India's in this massive IP transformation. He used the phrase, the next decade of digital infrastructure will be returned in India, talking about just an unmatched pace of investment, public and private, in tech, cloud, automation. There's this urgency, he said, for India to really lead the digital economy, not just follow. So that huge capex, even with the short-term loss, that's them putting their money where their mouth is, investing directly in that future.
Okay, so it's a real foundational bet on India's digital future. And it lines up with government pushes too, like Digital India, the India AI mission. Those are driving investment into compute and access. And you mentioned regulatory clarity helping unlock private money for data centers for 5G.
Precisely. And this feeds into something crucial the chairman highlighted. India moving from just consuming AI to actually creating it, creating high-end AI tools, frameworks, specific solutions for different industries. That ambition creates, huge demand for the very things Sify Tech is building. Infrastructure for high-performance computing, edge, keeping data sovereign within India. He called India a growth engine, not just a market. And they want to be the fuel for that engine.
That's a really powerful vision, very ambitious. But ambition needs discipline, especially with numbers like that CapEx figure, nearly 2.9 billion INR. How did the CFO talk about managing the finances through all this investment?
Yeah, the CFO is quite clear on that point, emphasized a real commitment to cost efficiency, fiscal discipline, even with everything going on. They stressed that it's all about long-term value creation, careful risk management. They actually called the current hits from depreciation, interest costs, more hiring. They called them conscious trade-offs.
Conscious trade-offs.
Yeah, basically sacrificing some profit now to build those capabilities for the future. Oh, and they also mentioned weaving sustainability into the core business, not just as a compliance thing.
Conscious trade-offs, okay.
Yeah.
But for someone looking at this, what's the time frame? When do these trade-offs, these future capabilities, actually start translating into profit? Are there risks if it takes longer, or if the market uptake isn't quite as fast as they hope?
That's the multi-billion rupee question, isn't it? It's a significant bet they're placing. So let's drill down into where this is actually happening, how the different business segments are performing. The revenue split this quarter was network services, 41%, data center colocation, 37%, and digital IT services brought in 22%.
That data center piece, 37%, definitely catches the eye, especially with the CapEx. They commissioned, another 8.66 megawatts this quarter?
Yep, which pushes their total operational capacity built and ready to sell to 138 megawatts.
138 megs, that's substantial.
And it's growing fast. They just brought 2 new Greenfield sites online in the last 4 months, Delhi and Chennai, each designed for 26 megawatts. And looking ahead, they've got 2 massive ones under construction in Mumbai, 52 megawatts each, expected later this financial year.
Wow.
Plus another Greenfield project they haven't detailed yet. So it's a huge rapid build out. They did say capacity operationalization, actually turning it on will depend on customer demand. Which is sensible.
Okay, massive data center expansion.
Yeah.
But that needs a strong network underneath it all, right? How are network services doing? That's 41% of revenue, the biggest chunk.
Yeah, still the biggest piece. As of December 24, the services they provide through their fiber nodes saw a pretty strong 14% quarter-on-quarter increase. And they rolled out around 9,473 new contracted SDN service points. So yeah, they're definitely continuing to build out that network backbone. It's essential for everything else they're doing.
Okay, so data centers booming, network services growing steadily. What about the third piece, digital IT services? That was 22% of revenue, but you noted flat top line year on year and increased operational losses. What's the story there? Intentional shift.
That's exactly what management said. It's a conscious change. They're deliberately shifting away from relying heavily on big one-off project revenues. The focus now is on building up recurring or annuity services, more predictable income streams.
Oh, okay. Makes sense.
The losses right now, they say that's a direct function of investing heavily in people and building capabilities specifically for the India IT services market. They put a timeline on it too, expecting to see results shrinking losses, better operating performance within the next 12 to 18 months.
12 to 18 months. Okay, that's a time frame to watch.
It's definitely a gamble on long-term stability over short-term project wins.
Got it. So this shift impacts the overall profitability picture, the EBITDA margins. We know the data center business runs at a really healthy margin, close to 45%.
Yeah, around 45%. Network business is more like 18%.
And digital IT is the work in progress right now.
Exactly. That mix currently puts their consolidated EBITDA margin somewhere around 19-20%. Management did talk about aspirational goals, though, pushing that group margin higher, maybe towards the 25% region.
25%. Ambitious.
They said they are certainly working for that. The key driver for that uplift would be the IT services business getting traction and hitting profitability within that 12, 18-month window you mentioned.
Right. If that segment turns around, it could really boost the overall numbers, given the strong data center contribution.
Definitely. The leverage is there if they can execute on the IT services turnaround.
Now, you mentioned something really innovative earlier, particularly around AI workloads in their data centers. What sets them apart there?
This is quite unique, actually. They have 3 campuses, Mumbai, Chennai, Noida, that are certified by NVIDIA for liquid cooling. And these can support really dense configurations up to 130 kilowatts per rack. Huge power.
Liquid cooling, certified by NVIDIA.
And they're leveraging this tech with a pretty novel pay-per-use colocation model specifically for AI. The idea is customers bring their own GPUs, the expensive part, and Sify Tech provides the space, power, cooling, everything else. But the pricing isn't just a flat monthly fee. It can be per hour, on demand, monthly, yearly, designed to kind of mirror how you might pay for using the GPUs themselves.
Pay-per-use colo for your own GPUs. That is different, especially with that kind of power and cooling.
Yeah, management said they're seeing some interest globally for this model. It could be a real differentiator, especially with everyone scrambling for AI infrastructure.
Wow, yeah. Pay-per-use, liquid cooling, NVIDIA-certified, right here in India. That sounds like a serious potential edge given the AI push. One last thing on the strategy. How are they funding all this growth?
Yeah.
Any talk about capital raising or an IPO?
They kept it a bit general, said the company is still evaluating different ways to raise capital for the digital subsidiary, and that the board will guide the decision on the best option and the timing, potentially including an IPO down the line. So it sounds like they're keeping options open, strategic partners, public markets to fuel this expansion.
Okay, so pulling it all together. Sify Technologies making massive investments, huge capex. They're accepting near-term losses as part of this conscious trade-off, all based on this big long-term vision of India as a digital and AI growth engine. It's a bold strategy.
It really is. And you see the different parts moving at different speeds. The data centers are expanding incredibly fast, network services providing the foundation. And then there's the digital IT services segment undergoing this major shift from projects to annuity revenue. That changing mix is definitely something to watch.
Yeah, how that shift plays out could really reshape their financial profile over time.
And their positioning in AI, that NVIDIA certification, the liquid cooling, the pay-per-use colo model, that feels like a very deliberate attempt to carve out a high-value niche, a real competitive differentiator if it takes off.
Absolutely. And that 12 to 18-month sock on the digital IT services turnaround feels critical. If they hit that and it starts contributing positively alongside those high-margin data centers, you can see the potential impact on consolidated EBITDA. That's the key metric, really.
Okay, time for our regular disclaimer. This next bit is purely for informational and, frankly, entertainment purposes. It is absolutely not financial advice. Investing carries risk. Always do your own research.
All right, so think about everything we've discussed. Sify Technologies' huge Q1 capex, almost 2.9 billion INR. Their super aggressive data center build-out, 138 megs operational, plus another 104 coming soon in Mumbai. And that unique NVIDIA-certified pay-per-use model for customers bringing their own GPUs for AI. Here's an outrageous but plausible trade idea for you to consider.
Okay, lay it on us, the thesis. Go long Sify Technologies using long-dated, out-of-the-money call options. The outrageous part, you're betting on rapid and full utilization of all that cutting-edge, AI-ready data center capacity, and at premium prices.
Okay, betting on them filling up fast and charging top dollar. Why?
The conviction comes straight from that chairman's vision, India becoming an AI creator, not just a user.
Yeah.
If that happens, the demand for precisely this kind of integrated high-performance infrastructure could surge way beyond current expectations.
And the plausible part. The plausibility comes from their first mover advantage, seemingly, with this specific pay-per-use model, combined with the NVIDIA liquid cooling certification. That's a tangible edge. So the trade assumes the operational leverage kicks in hard as those data centers fill up. Combine that with the digital IT services actually turning profitable within that 12, 18-month window, maybe even shifting successfully to annuity.
Right. The idea is that this combination doesn't just erase the losses, it propels those consolidated EBITDA margins significantly higher, maybe even blowing past that aspirational 25% target, and potentially faster than the market currently expects.
So it's a pure leverage play on their massive investment and strategic gamble on India's digital and AI future.
Exactly. Bold bet on a bold strategy.
And that wraps up our deep dive into Sify Technologies Q1 FY25-26 results. We've unpacked their big strategic investments in digital infrastructure, especially data centers and AI capabilities, and we looked at that ongoing transformation in their digital IT services segment. What really stood out to you from this call? How do you see these major long-term bets playing out for Sify Technologies over the next couple of years?
And one final reminder from us, this analysis is for informational purposes only. It is not financial advice. Please always do your own homework and due diligence.
Thanks for joining us on the deep dive. We appreciate you tuning in.